All right, let's dive in. We're tackling the OG crypto paper today, Bitcoin, a peer-to-peer electronic cash system. You know, that one from the mysterious Satoshi Nakamoto.
This paper, it really is the foundation of the whole crypto movement. It's full of revolutionary ideas.
Our goal is to figure out how this paper imagined a digital cash system completely decentralized, one that doesn't need banks, or any central authority. That's pretty radical.
Absolutely. Nakamoto starts by pointing out the flaws in the traditional online payment systems, the way they rely on trusting financial institutions.
Oh, right. Because that trust, it comes with its own set of risks and costs.
Yeah, like fraud, for one, and then all those fees that eat away at your transactions.
And let's not forget about the whole reversibility thing, or should I say lack of it. In traditional systems, those transactions, well, they can be reversed, which creates uncertainty. It just makes that need for trust even bigger.
Exactly.
Have you ever bought something online and felt a little unsure, like, will the payment even go through, or will the seller actually send me what I ordered?
I know what you mean.
That's the kind of friction Nakamoto is trying to eliminate.
That's it. And so Nakamoto's solution, a system based on cryptography, not on trust. Bitcoin cuts out the middleman. It goes straight for those peer-to-peer transactions.
So cryptography, that's the key here. So what makes this approach so different?
Well, it shifts the responsibility of trust. Instead of institutions, it's all on a mathematical system. Digital signatures, they become the backbone. They act as proof of ownership and keep those transactions secure.
So you're not relying on a bank to verify everything. You're relying on the strength of this cryptography. Are there any downsides to that?
Well, for one, you need a certain level of technical know-how to set up the system, but also for everyday users to actually interact with it. And then there's the challenge of making sure that the cryptography itself is secure, that it can withstand any attacks.
So there's still trust involved, but it's trust in something completely different.
Precisely. And to really get how this trust works, we need to look at how those Bitcoin transactions are structured. Picture them as a chain of digital signatures.
Okay, so like links in a chain, with each owner adding their signature when they pass the coin along.
Right. And this chain creates a history, a clear record of who owned each Bitcoin. But this leads to a big question. How do you prevent someone from spending the same Bitcoin, not once, but twice?
Ah, the classic double spending problem.
That's it. Nakamoto tackled this with the idea of a distributed timestamp server. It's a key innovation, a real game changer when it comes to Bitcoin security.
Distributed timestamp server. Can you break that down for us?
Imagine a public ledger, like a record. Everyone has access to it, and it keeps track of every single Bitcoin transaction in chronological order. But here's the catch. No single entity is in charge of maintaining it. It's distributed across the entire network.
So there's no single point where the system could fail. That sounds incredibly resilient, but also super complex.
Yeah.
How do you keep this ledger accurate without someone in control?
Well, that's where proof of work comes in. This is what keeps everyone honest. It prevents anyone from messing with the transaction history.
Proof of work sounds intense. Can you tell us more about how it works?
It's basically a puzzle, a computational puzzle. Miners, they have to solve this puzzle to add new blocks of transactions to that distributed timestamp server.
Hold on, miners. Like a digital gold rush.
In a way, yeah. These miners, they use their computing power to solve complex mathematical problems. Think of it as a race. Whoever wins gets to add the next block to the blockchain. And for that, they get rewarded with Bitcoin.
Oh, so there's a financial incentive to participate in securing the network. But what stops someone with a ton of computing power from taking over, manipulating the whole system?
Well, that's the clever part. The difficulty of these puzzles, it changes automatically. It makes sure that blocks are added at a steady pace no matter how much computing power is being used. It happens roughly every 10 minutes.
Fascinating. So even with a supercomputer, someone couldn't just hijack everything.
Exactly. This difficulty adjustment, it's all about keeping things stable and predictable.
Okay, so we've got the network, miners solving these puzzles, and a public ledger recording every transaction. So what happens when I want to use Bitcoin to buy something?
First, your transaction gets broadcast. It goes out to all the nodes in the network.
Nodes. Are those the miners?
Not necessarily. A node is basically any computer that's running the Bitcoin software. Could be a miner, could be someone just running a wallet to send and receive Bitcoin.
Got it. So my transaction goes out to all these nodes. What next?
Each node, it gathers new transactions and puts them together into a block. Then the miners get to work, trying to solve that proof of work puzzle for our block.
It's like a race, but with math instead of horses.
You got it. When a miner finds the solution, they announce it to all the other nodes. They say, hey, I won. This is my block.
And what if two miners find a solution at the same time?
That's when you get a fork in the chain, a
Yeah.
temporary one. But the system is designed to fix that quickly. As soon as the next block is added, one branch becomes longer, and everyone switches over. It's self-correcting.
So the chain just keeps growing, block after block, each one connected to the one before it. And the miners, they're all competing to add the next link. It's like a living, breathing thing. But how do we know those nodes are honest? What's stopping someone from adding fake transactions or trying to cheat the system?
That's where those incentives come in. Bitcoin is built to reward good behavior and make cheating super difficult. Remember the mining rewards.
Right, the Bitcoin they get for solving those proof-of-work puzzles.
Exactly. The more computing power a miner uses, the higher their chances of winning that reward.
So the system encourages miners to play by the rules. What about the people who just want to use Bitcoin, not mine it?
Great question. There's a clever system in place so people can verify payments without needing to run a full node.
That's a relief. Not everyone wants to dedicate a whole computer to running the Bitcoin network.
I hear you. With simplified verification, you just need a copy of the block headers from the longest chain. Those headers are like summaries of each block. You can check with different nodes on the network to get them. Then, to verify a transaction, you need something called a Merkle branch. Think of it like a proof that connects your transaction to the block where it was included.
So it's like a receipt proving that my transaction is in the official records.
That's a good way to put it. Basically, you're trusting that most of the nodes in the network are being honest. And considering those incentives we talked about, it's a pretty safe bet.
All right, so we've got this system that's secure, it's decentralized, and relatively user-friendly. It's pretty complex. But what does all of this mean in the bigger picture? Could a decentralized, trustless currency like Bitcoin really disrupt the traditional financial systems?
Now, those are some big questions. And those are some of the things we'll continue to explore in the next part of our deep dive.
Welcome back to our Bitcoin deep dive.
It's really fascinating to think about how Bitcoin could change the way we think about money, how we even use it.
Absolutely. One thing that really stood out to me in Nakamoto's paper was this idea of a currency that's not controlled by any government or central bank.
Yeah.
It challenges everything we know about financial systems, Makes you wonder about the consequences, the good and the bad.
Oh, it definitely shakes things up. Governments have had a monopoly on currency for centuries. They use it to control their economies. But Bitcoin, it challenges that control.
What could that kind of power shift mean? For individual freedom, for economic stability? Could it open up new opportunities? Or could it lead to chaos?
Those are the big questions that come with a decentralized system, for sure. The people who really believe in Bitcoin, they think it can even the playing field, give people more control over their own money, reduce our reliance on those big institutions.
It could be a lifeline for people living in places with unstable currencies, or where it's hard to access traditional banking.
Exactly. It could give them financial inclusion, empower them. But of course, this raises some red flags for governments. They're used to having control over currency.
It's a huge change from how we've always done things when it comes to financial oversight. We're already seeing regulators all over the world struggling to figure out what Bitcoin even is, how to regulate it.
And then there's a volatility issue. Bitcoin's price swings have been pretty dramatic. That makes it risky for individuals and businesses.
Yeah, it's definitely exciting, but also uncertain. Do you think that volatility will calm down as Bitcoin becomes more widely used, as it gets more integrated into the global economy?
Some experts think so. Their argument is that as the market matures, as more big investors get involved, those fluctuations will become less extreme. But Bitcoin is still a pretty young technology. It's hard to say for sure what the future holds.
It's true. And beyond just the economic implications, there are the social and political dimensions too. What happens when you have a truly global currency, one that's decentralized, one that goes beyond national borders?
It fundamentally changes how we interact with money. It can even reshape ideas about sovereignty, about power. Imagine sending money to anyone, anywhere in the world, instantly. No banks, no exchange rates.
It could streamline international trade. Things like remittances, humanitarian aid, they could become much more efficient.
Absolutely. But then, of course, you have to ask, how do governments enforce tax laws? How do they combat money laundering? How do they manage the risks that come with a currency that doesn't respect borders? Lots to think about.
It's a double-edged sword, like you said, exciting opportunities and new challenges. I'm also curious about the environmental impact of Bitcoin. We've talked about the energy it takes to mine it. Are there ways to make it less energy intensive?
Yeah, the energy consumption is a valid concern for sure. Some estimates say the Bitcoin network uses as much electricity as some entire countries. It's a lot of energy.
It doesn't seem very sustainable in the long term. What are people doing to address this? I've heard about proof of stake, that it could be a more energy efficient method.
There are definitely efforts to make Bitcoin mining more sustainable, like using renewable energy sources, developing more efficient algorithms. And yeah, proof of stake, it's promising. Some other cryptocurrencies are already using it.
How is proof of stake different from proof of work?
So with proof of work, you have miners solving those complex puzzles. But with proof of stake, validators are chosen based on how many coins they own and how many they're willing to stake to basically lock up as collateral. This gets rid of the need for those energy-guzzling mining operations.
Sounds a lot more environmentally friendly, but are there downsides to this system?
Well, every system has its trade-offs. Some people argue that proof of stake could become more centralized, which might make it more susceptible to certain attacks, but it's still being researched and developed. It'll be interesting to see how things play out.
It seems like Bitcoin is still in those early stages, right? We're just starting to understand how to deal with the challenges and really tap into its full potential.
Yeah, it's an exciting time to witness how this technology is evolving. It's pushing the boundaries of what's possible in the world of finance.
Feels like we're watching a financial revolution in real time. And speaking of revolutions, one of the most intriguing things about Bitcoin is how it could disrupt traditional financial systems. Can you expand on that a little?
Think about the role banks play right now. They're like middlemen.
Mm-hmm.
They make those payments happen, they control access to capital, and they definitely charge fees for their services.
And those fees can really add up.
For sure. But Bitcoin offers this peer-to-peer system that cuts out the middleman.
Mm.
You can send and receive money directly. No need for a bank or a payment processor.
It's about taking control of your own finances.
Right. And this cutting out the middleman thing, this disintermediation, it has the potential to impact all kinds of financial services, from payments and remittances to lending and investment.
So we could see decentralized platforms popping up for lending, for peer-to-peer insurance, for new types of investments that anyone with an internet connection can access.
Those are just a few of the possibilities Bitcoin and blockchain technology open up. It's a huge shift, one that could transform the whole financial landscape.
It's exciting and a little scary to think about what could happen, what challenges we might face. With any disruptive technology, there are going to be winners and losers. Who do you think will benefit the most from Bitcoin's rise? And who might get left behind?
Oh, that's a tough one. It's really too early to tell for sure. But I'd say those who embrace Bitcoin and blockchain early on, individuals and businesses, they'll probably have a big advantage.
It's like with most innovations, early adopters tend to reap the biggest rewards.
Exactly. Those who resist change might have a harder time adapting as the world moves forward. That's why it's so important to stay informed, to be open to new ideas.
Couldn't agree more. It's a fast-moving space. We need to stay engaged, keep learning. But before we get ahead of ourselves, let's circle back to Nakamoto's paper for a minute. Let's talk about the limited supply of Bitcoin.
Ah, yes. That's a fundamental difference between Bitcoin and regular fiat currencies.
Governments can just print more fiat currency whenever they want, which can lead to inflation. It devalues the currency. But Bitcoin, it's designed to have a fixed supply.
Right. There's a hard limit. Only 21 million Bitcoins will ever exist.
So it's like digital gold, a scarce resource that can't be inflated away.
That's the idea. The limited supply is one of the main things that attracts investors to Bitcoin. They see it as protection against inflation, a way to hold on to value over time.
But if there's a fixed supply, doesn't that make it harder for Bitcoin to become a currency everyone uses? If it gets too valuable, wouldn't it be impractical for everyday purchases?
That's a good point. It does seem a little strange to imagine buying a cup of coffee with a fraction of a Bitcoin that's worth thousands of dollars. But Bitcoin can be divided into smaller units called Satoshis. Those allow for tiny transactions, even if the price of a whole Bitcoin skyrockets.
So it's like having pennies for your digital dollars.
Exactly. And as Bitcoin becomes more valuable, who knows, we might need even smaller units. The system can adapt.
It's amazing to think about how this whole system could change and grow as Bitcoin is adopted by more people.
It's a grand experiment in monetary policy, and it's happening right in front of us. As we've seen in this deep dive, Bitcoin really could transform the world of finance as we know it.
It's been an incredible journey so far. But honestly, I feel like we've only scratched the surface of this topic. It's so complex and fascinating.
There's always more to learn. But we've gone over the core principles and explored the impact this revolutionary technology could have.
We've laid a solid foundation for understanding Bitcoin.
Hopefully our listeners now have the tools to continue their own exploration of Bitcoin and the whole world of cryptocurrencies. There's so much to discover.
And we're back for the final part of our Bitcoin deep dive.
We've really dug into the technical side of things and all the potential disruption this tech could bring.
Right. So now let's zoom out a bit. Big picture time.
Where does Bitcoin fit in the whole story of money and finance? Is it just a fad, a bubble that's going to burst? Or is it something bigger, a real game changer?
The million-dollar question. Some people think it's just a phase, like those tulip manias, something that's going to fade away.
And then you have others who think it's the future of money, a revolution that's going to reshape the global financial system as we know it.
It's been a wild ride for Bitcoin since it started. Those incredible highs, those dramatic crashes, passionate believers and skeptical critics, it's got them all.
But it's still here. It's evolved, it's matured, and there's this growing community around it, developers, entrepreneurs, regular folks who are using it every day.
And it sparked all this innovation in the blockchain and cryptocurrency space, all these new projects and applications.
But what's next? What does the future hold for Bitcoin and for money itself?
Yeah, trying to predict the future is always tricky, especially with something that's changing so fast.
True. But we can explore some possibilities, think about the things that'll shape Bitcoin's path.
Let's start with regulations. Governments are still trying to figure out how to deal with Bitcoin and all these cryptocurrencies.
Right. Will they accept it? Try to control it. Or try to shut it down completely. The way it's regulated will have a huge impact on whether it's adopted widely.
If governments come down too hard with regulations or even try to ban it, that could really stifle innovation, limit Bitcoin's growth.
But on the other hand, if they support it, that could encourage even more innovation, bring in those big institutional investors, and that could lead to more stability, wider adoption.
Another big factor is technology. Blockchain, the tech behind Bitcoin, it's always evolving.
We talked about proof of stake as an alternative to proof of work, but who knows what other breakthroughs are coming? What else could impact Bitcoin?
Scalability is a big one, right? The Bitcoin network can only handle so many transactions per second right now, and that can cause delays, higher fees when a lot of people are using it.
Definitely a hurdle if Bitcoin wants to become a currency that everyone uses globally.
So what are people doing to address that?
Well, there's a lot of research and development happening. They're implementing things called Layer 2 scaling solutions, like the Lightning Network, to help handle more transactions.
These technological advancements, they're going to be key. That's what will determine if Bitcoin can really live up to its potential as a payment system.
And beyond the tech itself, there's the social aspect. Will people accept it? Will Bitcoin go mainstream? Or will it stay something that only tech-savvy people use?
If Bitcoin is going to truly succeed, it needs to be easy to use, easy to understand, and people need to trust it.
And it's getting there. You've got these user-friendly wallets, exchanges, payment processors. They're all making it easier for people to get involved, buy and sell Bitcoin, use it in their lives.
And as more businesses start accepting Bitcoin, it'll become more integrated into our daily routines.
Education is important too. The more people understand Bitcoin, the less intimidating it becomes.
Like with anything new, once you understand it, it's not so scary anymore.
So fad, bubble, or paradigm shift? It's still too early to say.
But one thing's for sure, Bitcoin has already made an impact.
It's challenged how we think about money. It's sparked a wave of innovation. It's gotten people all over the world talking about money and the role of technology.
Even if it doesn't end up being the currency of the future, it'll leave a lasting legacy.
It shows what human ingenuity can do, our drive to create a better future.
So as we wrap up this deep dive, what's the one thing you hope our listeners take away from this?
I'd say keep exploring. This is a fascinating field that's always changing. Don't be afraid to ask questions, challenge what you think you know, and form your own opinions.
There's so much to discover. Keep learning, and who knows, maybe you'll be the one to come up with the next big financial innovation. Thanks for joining us on this deep dive into Bitcoin. We'll see you next time.